You remember when sneakers weren't just footwear, they were investments. When limited releases didn't just sell out, they exploded in value. When a pair of kicks could pay rent or at least help with next month's bills. That era belonged to the resale market, the secondary market, the place where hype became currency. The resale market is simply this: you buy something at retail, someone else wants it more, you sell it for more than you paid. It thrives on scarcity and demand. Companies like Flight Club and Cool Kicks turned this into business models. Buy rare shoes, resell rare shoes, profit. In the peak years, the Jordan 1 shattered backboard became legendary. The story of the artistically destroyed backboard MJ dunked through, then the colorway dropped, a fiery orange-black combo that collectors chased for thousands. The Yeezy Red October release, limited, hyped, immediate sellout, high margin in the secondary. The Nike SB Dunk Freddy Krueger, so rare its resale price dwarfing retail by many multiples. These drops created an entire ecosystem. Sneakerheads, resellers, marketplaces, StockX, Gold, they all fed off this hype loop. The resale price soared, resale culture boomed. This was exciting, but it wasn't sustainable, because when resale becomes the goal, retail becomes a gamble. The lines get longer, the bots stronger, the cool factor gets diluted. And retailers watched as small boxes of sneakers turned into big profits for the few, while many regular buyers got frustrated, priced out, or left the game altogether. Sneaker resale became about value extraction rather than consumer experience. That imbalance created problems, not just for buyers, but for brands. This is where Nike comes in. As the biggest player in limited edition sneaker drops, Nike began to sense the risk. Oversupply, resale collapse, brand dilution. Under the leadership of Elliott Hill, CEO, Nike signaled a shift. With high-command general releases such as the Black Metallic Jordan 5, Black Cat Jordan 4, and the shattered backboard Jordan 1, Nike's intentions were clear: to restore balance and bring consumers back into stores in 2025. By limiting supply, amplifying demand, and reopening distribution to retail, not just hype drops, Nike aimed to lower the resale premium and reconnect with the everyday buyer. When Nike released more grails into retail channels, several things happened. The extreme scarcity reduced somewhat, less margin for speculative resale. Everyday consumers could access more of the desirable sneakers instead of only resellers. The resale price levels began to drop. Some once insanely hyped models now struggle to maintain those highs. The brand regained control of the narrative. We serve athletes, not just investors. Essentially, Nike shifted from "let the market dictate value" to "we'll redefine value." They said, retail matters, real customers matter. Resell for profit, not our only priority. This isn't just a sneaker story, it's a business story. Scarcity can create value, but only if it builds brand equity, not just profit margins. When a company profits from sideways markets, resale, speculation, rather than its core consumer, it risks long-term disconnect. Realigning with the core customer, the everyday buyer, can restore health to your brand. Controlling your supply, your narrative, your value proposition, those matter even more than hype. So, next time you see bots, long lines, instant sellouts, and resale prices skyrocketing, ask, who is this really for? And what happens when the hype bubble pops? Nike's move in 2025 says they're betting on the long game, not just selling for the moment, but building for the many. Because when scarcity becomes desperation, the value isn't sustainable. And when consumers feel left out, brand loyalty cracks. In the sneaker world and in every business, the most valuable currency is trust. Not just in the product, not just in the drop, in the brand.